When I say I lost everything, I was actually right by that title. And as you can look at the screen right now, you can see for the past 2 weeks, that is the ending of February till the beginning of March, you can see that every single trade that I've been taking has actually been turning out to be a loss. And I've had just a few break-even trades. What you're looking at right now is actually my trading journal, which I have on Notion. And these are the trades that I've been taking. But you might be thinking, okay, if I've been losing all of these trades, or if I've been losing literally everything, then that means the trading strategy I'm using is actually a bad trading strategy. And no, it's not a bad trading strategy, because if we scroll up and look at the trades which I used to take previously, that is earlier in the month of February, you can see that I was having a break-even trade, I have a winning trade, very good wins, and you can see that my wins are averagely more than the losing trades that I've been taking. So you can see that these past 2 weeks have actually been a losing streak, but before that I've actually been on quite a winning streak. And anytime I take a losing trade, I actually have a winning trade to cover up the trade that I took previously. So as you can see right here, this was a losing trade that I took, and this was 1% of my account, but the trade that I got after that was a winning trade, and it was actually 2%. So I was making 1:2. So when I lose 1%, I make 2%. To be very honest with you, I actually never wanted to make this video, because we are in a very crazy kind of industry, that is the forex industry, in which most of the content we consume online is actually content of people who are showing you flashy stuff, showing you a particular kind of lifestyle which you actually do want to see. But I want to be authentic. I want that when you come to my channel, what I'm going to be showing to you is going to be something that is real. That is why on this channel I've shown you me taking very good winning trades. I've shown you me taking break-even trades, and also right now I'm actually showing you not just the fact that I've been taking losing trades, but the fact that I've actually been on a losing streak. And then now what you might be asking, what is the trading strategy that I'm using? I'm actually using a trading strategy that was created by ICT, and let me just give you the rules of that trading strategy as we look at the charts right here right now. You can see that this is the chart of S&P, and I actually look for my trades on indices only. So I trade mostly S&P and Nasdaq. These are the different rules that I look for in the charts before I get my trade. And the first thing I want to look for, if it's a bullish trading setup, as you can see right here, I want to see at least 2 bearish candles before a nice impulsive move. I want to believe you as well can agree that this is a nice impulsive move. And also, I want to see that this impulsive move should take out a significant swing high. And as you can see right here, this is a significant swing high that this bullish impulsive move of ours has taken. Another thing I want to see is the impulsiveness of that move. Now, for Nasdaq, I want to see the impulsiveness of that move to be greater than 25 points. But S&P is a little bit different. So for S&P, the impulsiveness should be greater than 7 points. And I measure the impulsiveness on the body of that candle. So if you want to measure the impulsiveness of this candle, you can see that the impulsiveness is actually 10 points. So that means it's actually greater than 7. Then the last thing I look forward to is the impulsiveness actually should form a fair value gap. And as you can see right here, this is the fair value gap that this impulsive move has formed. And how do we know it's a fair value gap? Because this is candle 1, candle 2, and candle 3 of this entire move, right? And within this entire move, you can see that the high of candle 1 did not meet up with the low of candle 3 of the entire move. So that means this space that has been formed here is what we call a fair value gap. And to draw that in time, you can see that this is where we want to get our trade. Now, the next thing I do before I get a trade is actually drawing a fib from the low to the high of that entire range. And normally, I always want to take my trades from the 0.5 of the fib. Then I place my stop loss down here at the 1. Then I place my take profit here at the negative 0.5. And if we were to do that, actually, you're going to see that this trade would have actually given us a 1:2 trade. That is, if I draw it right here, and you can see, if I correct it just down here to the 0.5, so you can see it's actually exactly a 1:2 trade. But now I don't always take these trades directly like this when they are formed on the higher time frame. You can see that here this trade has actually been formed on the 3-minute time frame. So for me to get more confluence and to be more confident when I get into my trade, I'm going to cancel this so that I show you that better. So what I always normally do is when I get the fair value gap and I draw the fair value gap like this, I always like to drop down to a lower time frame, the first lower time frame lower. Since now we're on the 3-minute time frame, I like to drop to the 1 minute. If we're on the 5, I should have dropped to the 3-minute time frame. So I want to go down to the 1 minute time frame, and I'll be looking for the first fair value gap that has been formed within this 3-minute fair value gap, and that is where I'm going to be taking my trade. Now we have dropped down to the 1 minute time frame, and as you can see on the 1 minute time frame, this is actually the first fair value gap that has been formed. And as you can see, the high of this higher time frame fair value gap is actually the low of this candle that actually forms this fair value gap. This is exactly what I want to see. So if there was actually not a fair value gap within this zone, that is before price came back to get into this fair value gap, I should not have actually taken the trade. And now this is the beauty of what I do, because on the 3-minute time frame, when we drew it out, we saw that it was actually a 1:2 trade. But now let's draw it out on the 1 minute time frame, and we are going to see the risk to reward that the trade actually gives. Now we are going to be taking it based on the fair value gap and not based on the 0.5 of the entire range. So if we put our entry right here and our stop loss is right at the bottom here, and our take profit still remains at the negative 0.5 level, you can see that our trade actually gives us a better risk to reward. So we don't just have a 1:2, but we have a 1:2.6. With this is the trading setup that I will be normally looking for, and this is how I get my trades using this trading strategy. Now we have gone back to my trading journal on Notion, and the question you might be asking now is, what did I do wrong to get a losing streak with this trading strategy, which looks very amazing and it has a track record of being consistent and profitable? And the answer is nothing. I didn't do anything wrong. All I did is I continuously followed the rules of my trading strategy, but because of the current market conditions, that is what actually caused me to take losing trades. Okay, this was one of the trades that I lost, and based on what I've just shown and explained to you right now, you can see that I look for a very nice bullish impulsive move that has taken out a swing high. That is if it's for a bullish setup, at least 2 bearish candles. This is exactly what I've just shown you right now, right? Which actually went to a take profit. But as you can see right here, I followed every single rule like I want to do, even though this formed on the 1 minute time frame and will not be dropping down to any time frame. But you can see price actually came and took us out of the trade. So I did not actually do anything wrong. I just followed every single rule like I always do. But because of the current market conditions in which we find ourselves in, I actually lost this trade. And this has happened with so many other trades. But there are quite a few things which I actually did wrong. There are a couple of trades that I took which were kind of impulsive because I felt like I was actually getting a little bit desperate. I'm actually doing phase 2 of my Forex funds funded challenge, and because I want to pass the funded challenge and because of the pressure that funding challenge actually give you, you actually realize that there might be a time in your trading that you're actually going to be taking trades which you should normally not be taking if you were actually just following everything. So there are a couple of trades, like mostly these last trades that I took, which I actually took them like last week, even though they kind of look like our trading setup, but there are a few things that happened to the trading setup that made the trading setup not ideal for my trade. If you can enter here, you can see that this is a 5-minute trading setup, right? You can see it follows all our rules, at least 2 bearish candles before a nice impulsive move, right? It formed one fair value gap down here, another one, the third fair value gap. And whenever I have so many consecutive fair value gaps like this, I always like to look at the higher fair value gap, because most of the times when I was doing my back testing, I realized that price always comes to the higher fair value gap and feels it. That is if it has an untouched fair value gap within, and when it feels it, it always goes to our take profit without coming back to our entry. That is if we're drawing the fib. But now you can see I drew the fair value gap right here. Then now let's go down to the 3-minute time frame where I should have normally taken our trade, right? And you can see this is where I took the trade, and based on this fair value gap on the 5-minute time frame, and we come down to the 3-minute, you see that right here we had this fair value gap on the 3-minute time frame that was yet untouched. But now the thing that actually invalidated this setup for me is when price formed this final candle here before price came back in to form this zone. On the 1-minute time frame, when I was looking at it, you can see that this candle right here, this was a 10 o'clock candle. The high of this candle went above the high of these 2 candles. So on the 1-minute time frame, the fair value gap that was formed within this fair value gap here was filled with this candle and it went above. And if you have been on this channel for a while, you know that whenever a fair value gap is filled and price goes above that high, we always love to go break even, because whenever we don't go break even, price can come against us and hit us our stop loss. So that was something that I was short-sighted to see, and I never saw that. But because of that, that is the reason why this trade went to our stop loss. Using this losing streak that I've had, I've got to go more deep into analyzing every single trade that I take, and that has made me to learn so much more about this trading strategy, which if I was just taking trades normally, I should never have learned about this trading strategy. And as you can also see, I've had a couple of break-even trades, and this was one of the crazy trades that I took within this week, which, as you can see, it formed everything, at least 2 bullish candles before the nice bearish impulsive move, which took out this swing low right here and formed this fair value gap, right? Very, very nice trade. And this was the fair value gap, and this formed on the 15-minute time frame. Now, I got my entry actually on the 5-minute time frame. So right now we have dropped down to the 5-minute time frame, and as you can see, this fair value gap was not untouched. As you can see, it looks very perfect. So this is where I placed my entry. My stop loss was right here at the high of candle 1 of that fair value gap, and my take profit was at the negative 0.5 level. As you can see, price came back immediately, got us in, and came all the way really close to my take profit, but it came all the way back, hit us at break even, then went to our take profit, in which we were not in the trade. So immediately as price had gone below this low, I took my stop loss to break even. This is another thing that I've actually learned going through this losing streak. I've actually learned that it's very important for me to actually take partials when I'm actually trading, because there have been several times that I've actually gone through these break even trades, which price has actually just gone like literally just a few points short of hitting my take profit, but it comes back all the way to hit me at break even, which you can actually see in probably this other example here as well. So you can see this was another trading setup that I actually took as well. At least 2 bullish candles before the bearish impulsive move, 1, 2, 3 fair value gap. I drew out the lower fair value gap just like I explained earlier, and I got my entry on the 3-minute time frame, and this was the fair value gap that was untouched, right? So my entry was here for the sell, my stop loss was here, and take profit here for the negative 0.5. So as you can see, the same thing has happened. Price got in, it actually retraced a little too deep than what I want to actually see, but it never hit our stop loss. Then it went below. Immediately it went below this low. I put my stop loss to break even, but as you can see, it went down. Actually, this was quite like a 1:1, because this was a 1:2, but it never hit our take profit, but it came all the way and hit us back at break even. And this is an example of the case where if we had actually not put our stop loss to break even, there you go, our stop loss was here, we should have been stopped out. So that is why we put our stop loss to break even. But this has actually taught me that I should actually learn or grow the culture of taking partials, because it's actually very important. And most of these trades that I was actually just taking outright break even without taking anything out of it, like this very beautiful one, which we had almost a few points close to our TP, and I never took out anything. And as you can see, for this past week, I've actually had 1, 2, 3, 4 different break evens. So if I was actually taking partials in these break evens, I should have been taking some profits out of the market and not just giving all the profits back to the market like I was doing. Now, based on my experience and based on the backtesting I've been doing, even as I've been going through this losing streak, these are a few things or a few tips that I've been learning, which I want to share with you guys to end this video. So the first thing you should do, and this is something I should have probably done if I was a beginner, is I should have now started to go and havoc or start looking for a new trading model that I'm going to start learning, because I will feel like this current trading model that I'm using right now does not work because I'm in losing streak and so on. So I'll be looking for other YouTube videos or whatsoever of people who are probably in winning streaks right now to do that. And that is the worst thing, or that is a very wrong thing to do. Even when you're in a losing streak, you should realize that losing streaks are very normal in the forex market, and everybody goes through losing streaks, even the best of the best. And I've actually realized that a couple other ICT traders during this particular period have actually been on losing streaks as well, and that actually gave me some kind of comfort in my heart that I'm not the only one who is going through this kind of tough times in the market, but so many other people are going through this kind of tough times. Another thing which I've actually learned is proper risk management. You can see that averagely on every trade that I take, averagely the loss that I always get is like 1%, and the 1% is averagely $100. And as you can see, even during this period that I've been having a losing streak, you can see that all my losses that I've been taking, I've been averaging only around that same amount of money. That is because regardless of the situations in which I find myself, I always take my trades with the same risk management, because I don't want to feel like I need to make up what I've lost and so on. And the moment you start feeling that, you realize that you will actually be taking more trades, and the trades which you're going to be taking are actually going to be losing trades because you are doing it impulsively, and they might not be actually meeting all the rules that you want to be seen met as you are taking your trades. Then the final thing which I've actually learned is, when I had this first week of the losing streak, I was like, the next week is going to be a winning streak, or the next week I'm going to make back all the money that I made. But I realized that the next week actually turned out to be another losing week. So getting back after a losing streak actually takes time, and you should not hurry the process. Even if maybe I'm going into the markets next week, and I will definitely be anticipating that the market is going to give me something good, or the market is going to be better off. But even if the market does not turn out to be better off, I should still follow my rules, and I should still continue anticipating. But I know that bouncing back after a losing streak takes time, and it's a slow process that I have to go through it. But definitely, because of the fact that I know I'm a consistent trader, and the strategy that I'm currently using is actually a consistent strategy, I know that regardless of the current situations in which I find myself in right now, I'm actually going to push through, and I'm actually going to get out of it. So this is just like kind of a motivation to you. Probably you might be finding yourself right now in a losing streak like I am doing. So you should know that you're not just the one. I'm also here with you. So whatever I'm showing you right now is actually to comfort you, to make you feel like you are not the only one who is finding yourself in that current situation. I'm also finding myself in that current situation, and that is why I'm very proud to actually share it with you right now, because I know it's something that is normal. And because of how toxic this industry which we are in right now is, everybody is wanting to show you that they are winning trades all the time, of which that is not the reality on ground. And I want to be as authentic as possible. Always remember that no trade is always better than a lost trade. If you want to actually see me backtesting this strategy for 1 week trade and letting you know that this is the best type of strategy that actually exists out there, then check out the video right now on the screen. With that said, catch you guys in the next one.